Hey, what's going on, everyone? I'm excited to bring this quick little video to you today about how I classify a market structure shift or changing character, however you want to call it. I've noticed throughout my time looking at charts that there are swing highs and lows, and we're pushing through those, creating fair value gaps everywhere. So, in order to help minimize what I guess most traders consider the noise in the lower time frame, I've come up with a set of rules that I like to see in order to constitute a market structure shift in place. So I'm going to get into those rules real quick. So essentially, we'll start at using time. So 9:30. We'll pretend like it's regular trading hours and there's nothing before. So at 9:30 we come to the market, and I won't get into higher time frame bias. I'm just trying to go over the specific thing I look for the market structure shift in this video. So on this day in particular, Monday, we opened and we came down. So this one's pretty easy to spot. We have a high right here. I'm going to draw that out. So what I'm doing now is I'm identifying, since prices started printing at 9:30, we have the lowest down close candles. So I'm going to look for the high right above that, swing high, right, which is right here in this case, and I need to see a buy side imbalance put in above that, and that would be this. So first, I know sometimes this could be considered an order block or whatever. There's a lot of, I guess, issues and inconsistencies when it comes to picking the right order block. But in ICT mentorship 2023, immediate rebalance and institutional order flow, that lesson ICT taught that the order block is the highest up close or the lowest down close in this situation. So we have a series of them right here. So I'd be looking at these three, and I need to swing high above those. So even though we have this, it's broken between these green ones, and it doesn't close lower than these. So these are the lowest close. So I'm looking at these. If we had all kinds of other down close that were down here, even if they wicked lower, if they didn't close lower, I don't care. I'm just looking at which one closed the lowest, and seeing how we have a series of them right here, we're going to this high. And right here, we have our first buy side imbalance put into play. So this is now telling me, okay, we have a market structure shift. Now, I know what you might be thinking. Well, we didn't, it wasn't clean like this. We actually came under it. So that's how I classify market structure shift. However, if you have something this high up, you don't necessarily need to get in there because, of course, we want to look to buy in a discount in this instance. So price does come down, give OTE entry, and then goes up. But these signatures with this buy side imbalance right above that high, that's what I need to see at least. So even if we moved all the way up here, to me, if there wasn't a buy side imbalance, I wouldn't consider any of this a market structure shift, because we'd just be moving back and forth, and we are just efficiently printing price. So if I'm trying to look for what we call displacement, then I need to see some kind of imbalance leaving this range. We have price come down into here, OTE, and then it does go a bit below the imbalance. This is mainly our signature that we need to tell us, like, here's our market structure shift. Doesn't necessarily have to be the entry every time, although you will see that if this is within if you're bullish, if it's within a discount, then most of the time it is respected pretty well, like it is here. Anyway, we trade up, and we would look for our next signature to tell us to want to go short. So right here we start a new session. We're into launch now, and we're looking at the high of the morning. So we take buy side right here, and once we do that, now I can start marking up close candles again. Because if I'm anticipating going to the downside, then I want to be looking at the up close. So alone, this isn't always going to work out. If if you're just looking at constantly up close candles, it can help you stay out of something like displacement here with the SIBI. You didn't get anything under your low, so it helps you stay out of there. Right here we have a higher up close with a low. We do put in a little SIBI here, and if you did take that, that'd be, you would have taken a loss here. But so it's better to pair this with other ideas. So taking buy side here, we have our highest up close, which would be this candle, and then if I drew out the low below it, it's this one. So our first sell side imbalance is put in under that is right here. So I'm going to mark that out, draw it out. So now that we have our signature, it is in a premium. We're looking to go short. So now we can anticipate price to come back up to here. Okay, so you can see we have this. Okay, so with this market structure shift here, this orange line and this civvy we have put in place, I'm not anticipating any of these to be the civvies to send price down to. So I'd be waiting right here. Now back here when we were talking about it as an entry, I said you could get in lower than it, but I would not chase price and look to, oh, here's another imbalance we keep displacing away. I definitely wouldn't chase this. I would look for this as an entry, if not a better entry. So applying that here from our order block high to our low, not only are we in OTE, but as long as we don't get back below this low, anything that's going on in here, I'm considering time distortion now. So I'm anticipating a trade back up into the civvy, and we could fail, displace back down, come back up, chop around, but until we take out this low now from this range that we're in, I'm looking at all this as time distortion. So we can see 130, I have a new session marked out. So now I'm gonna label this as sell side, and we would take our entry here. And the reason why this helps keep you out of a lot of the chop is you can see once we react off of that, there's plenty of lows getting taken, and we come back up, do it again. We're leaving sell side imbalances in there here as well, down here. So it's all over the place, but you see where price keeps coming up and respecting. It's this sell side imbalance, this and this one only. And then we go down and we take our sell side liquidity. So now that we've taken that, we can get that fib off of there. So now that we've taken that, essentially we could do the same thing, is start watching our lowest close, which would be these 4 right here. And then here's our high above it. I draw that out. Now see how this busy is right below it. So I'm not going to look at that one. I'm going to look at this one. Draw that out. And we don't get it. But that's okay, because you aren't going to get it every time. Obviously, this isn't 100%. But with reasons like this happening more often than not, I definitely wouldn't be chasing this one. Depending on your style, you could say, okay, here's our market structure shift, and you could fib this range. We didn't come to EQ. So yeah, either way, this probably would have been missed for most. And then that finishes off that day. Okay, here's another example. 9:30, we have the market open. We start tracking price. We have no displacement above highs or lows until right here. So right here, you can see we have this high. We do close above it, create a buy side imbalance. However, it's below this high. So now we're waiting. We still don't have a signature to go long. And we can look at these 3 right here. Those are our highest up close. And mark our low below it. And then you can see we have this sell side imbalance right here. Now, for the range of the order block, when I look for a low, it doesn't necessarily have to be the low that sent it up. You might have a better win rate, but I do get aggressive with it sometimes, and I'll look for lows like this, because this is a swing low that's still below our highest up close in the current price action that we're looking at. So market opens, messes around a little bit. We have these candles that swing up. That's marked out with this red box. We have a swing low here or swing low here. It doesn't matter which one you use. Either way, our first sell side imbalance that's put in is this one right here. And so this is our most current day. I just thought this would be a good example because you have this put in here. However, if you're waiting for your entry, you can see here's another sell side imbalance. There's one here, here, here. So to help you from, let's say, once you watch this displacement, getting in here, putting a stop here, and getting stopped out, you just want to wait for the actual inefficiency. The reason why is because in ICT's bridge builder lesson, he talks about how from like this low to this high, now we have all this buying up, and then now we're selling down through it. So from this low up here, technically this is a balanced price range. So I need to see some kind of inefficiency below it, and that's what I'm looking for price to at least go up to. So in my mind, this isn't necessarily the truth, because this is still inefficient with buy side. But I look at this area now from our imbalance we're looking at to the low, and I look at that as extra inefficient. So with that sitting up there, um, I don't I don't need to chase price on these ones. I need price to come and um, finish the bridge that it's building, and at least like I showed right here, at least uh, put some put some price over this right here. And you can see we do that, overshoot a little bit, but we don't overshoot the gap. The reason why this is a good example is, so if you're watching this anticipating a sell here, you have right here, this is your current down close at the time of going up into here, and here's our swing high above that. So we mark that out, and we do have an imbalance put in. So now you might be asking, okay, well, what do I do in a situation like this? Because this is conflicting. If you really know the draw, then you can take the one that, you know, goes in that direction. But for me, I like to see how we respond off both. So we didn't close above this. We didn't disrespect it. We actually responded off of it well and closed below it. Marking out these gaps now, this would be like a market structure shift. It failed, but you got to have your full context behind it. So here's your first one from the morning. These are the only gaps I'll actually anticipate to become inversion gaps now. And that's exactly what happens here. We sell off this one. If you didn't want to sell here because of this one, you could wait till we close below it, and then we go up, retest it, and then we sell off for pretty much all day. But if you're just targeting these lows, then that's all you need right there. All right, so yeah, there's a few examples of the past 2 trading days that we've had in the market and how I like to use certain set of rules to classify a market structure shift. These are the 3 videos that I've referred throughout this video that have helped me come to my conclusions and build these set of rules for this market structure shift. The immediate rebalance and institutional order flow, that's the video I've watched to figure out how to find the right order blocks, being the highest or the lowest in depending on order flow at the time, obviously. So I'd recommend checking that one out. And then the Tuesday, May 23rd, no, excuse me, this is Tuesday, June 13th, CPI and price action lecture. This is the one where ICT talks about time distortion, and in between a certain range, when you have time distortion, he doesn't care about any order blocks or fair value gaps being put into place. And finally, we have the bridge builder episode, and that's the one that ICT talks about when to know when a fair value gap is going to get left open. And he talks about looking for essentially the range and how it's considered a balanced price range. So the SIBI that's put in above or below the balanced price range is essentially the one you'd be expecting to get filled. So definitely check him out. He goes into them a lot more detail. You can see the times of all these videos. It's over 4 hours. So definitely a lot of studying, but I hope that I did a good job at making it condensed and just going over the rules that I have. And real quick, that's just the highest up close, and then you look for a swing low, right? Even if it's 1 tick below that, and then you look for a SIBI to be put in place, even if it's 1 tick below that, and that's your SIBI you're looking to go short from. So that's it. That's it for me today on this one. I'll post these in the comments, and that way you guys have easy access to find these videos. And let me know if you have any more questions. If this is still not making any sense, or it's still kind of confusing going through the charts, then let me know, and I'll do more videos on it, longer back testing sessions if that's what we need. But yeah, just let me know, and that'll be all for me today. I hope everybody enjoyed, and take care.